Good evening once again on the business desk. At this hour, consumers with a take-home income of about 15,000 rand or less are increasingly monitoring how much they are charged in banking fees. That's according to a Banking Insights Comparative Report, which surveyed over 9,000 respondents over an 11-month period. As Ntokozo Khumalo reports, this segment of the population says the cost of banking is a major decision when deciding which institution to use.
6 out of 10 consumers earning 15,000 rand or less per month consider the kind of bank charges they will be paying before anything else when considering a bank of choice. This trend has become the norm in recent months as the cost of living remains high. Moya App's Banking Insights Comparative Report shows that over half of the 9,000 low to middle income consumers surveyed prioritize lower fees when choosing banks. Capitec is eating all the banks for breakfast, remaining the bank of choice for this segment, with TymeBank a close second.
It is a considerable problem for them, and one of the reasons why your average South African will remove as much money as possible from their bank account and they'll transact in cash.
He adds that while Standard Bank has shown some improvements in making banking cheaper for that segment of the population, Absa and FNB have deteriorated over the 11-month period. All the banks have released their bank fee schedules for the year for their entry-level and mid-tier products, with some banks, such as FNB, set to review bank charges in July.
And what we're really learning is not only is the consumer under pressure, but equally banking has got to figure out how to improve its product.
Bayport Financial Services CEO Alfred Ramosedi says consumers must first understand what makes up their bank charges in the first place.
To just have that account, you have to pay a maintenance cost. Just to open it, not using it, just having it, there's typically a maintenance cost. The second one is that there are fees related to the transactions that you do in the bank.
He adds that a large portion of LSM 4 to 7 category finds themselves having to spend 80% of their salaries or wages on servicing debt before their essential expenses such as food, transport and education. Ramosedi says this typically leads to a revolving door of debt and then the neglect of debt, where consumers withdraw entire salaries before debit orders hit or dispute their repayments, pushing bank charges even higher.
If you miss a payment, if you have less money in the account and things go off, there are penalties that are coming off. Those bank charges, you should also try and understand what their budget is about.
Pierre Romagny, financial services partner at management consulting firm Oliver Wayman, says this is where financial literacy comes in, as it ensures consumers are empowered to make proper financial decisions.
How are these products going to make a difference in your life? How are you going to make the right decisions and pick the right products at the right time? Speak to the right banks that will serve your needs better.
The firm's Banking Trends report for 2024 highlights that consumers are becoming more conscious of not only how they bank, but also the cost of banking and the experience it gives them. He says it's up to the banks to make the first move to retain and grow their customer base.
South Africa, again, is going to be down to experience, ensuring that the value propositions are customized to what the clients actually need.
The banking industry is also keeping an eye on the impact of interest rate hikes and the rise of artificial intelligence on banking trends and how these could change consumer behavior across all segments. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Sandton, Johannesburg.